You just got a $10,000 bonus at work. First thing you do? You start thinking about what to buy with it. Maybe you pay off some debt. Maybe you upgrade your car. Maybe you take that vacation you've been putting off. Whatever you choose, you're spending that money because that's what money is for, right? You earn it, you spend it. That's how normal people think about wealth. But here's what's wild. If you gave a billionaire that same $10,000, they wouldn't spend it. In fact, if a billionaire needs $10,000 for something, they're not going to touch their own money at all. They're going to borrow it. And not because they can't afford it. They're billionaires. They could buy whatever they want with cash. But they don't. And understanding why completely changes how you think about money. My name is Todd, and I spend way too much time thinking about why the ultra-wealthy borrow money they don't need while the rest of us go into debt for things we can't afford. If you're someone who's ever wondered why rich people seem to play by completely different financial rules, hit subscribe and give this video a thumbs up because we need to talk about the single biggest wealth-building strategy that billionaires use and regular people completely miss. Here's the thing. We're taught from childhood that debt is bad. You should avoid it. Pay cash whenever possible. If you can't afford something, you shouldn't buy it. And for most consumer purchases, that advice is absolutely correct. Going into credit card debt to buy a new TV is stupid. Taking out a loan for a vacation is insane. But here's what most people don't realize. The wealthy don't think about debt the way you and I do. For them, debt isn't about affording things they can't buy. It's about avoiding taxes and preserving their wealth. And the math behind it is so simple and so powerful that once you understand it, you'll never look at money the same way. Let's start with a basic question. If you're a billionaire and you need $100 million to buy a yacht or a mansion or whatever, why would you borrow that money instead of just spending your own? You have billions. $100 million is pocket change. Why go through the hassle of getting a loan? And this is where it gets interesting. Because the answer isn't about affordability. It's about taxation. Here's how it works. Let's say you're Jeff Bezos, and on paper you're worth $200 billion. But that wealth isn't sitting in a checking account. It's tied up in Amazon stock. If you want to actually spend that money, you have to sell the stock. And when you sell stock, you trigger capital gains taxes. In the United States, long-term capital gains are taxed at 20% for high earners, plus a 3.8% net investment income tax, so you're looking at about 23.8% total. That means if you sell $100 million worth of stock, you immediately owe $23.8 million to the IRS. You wanted $100 million, but you only get $76.2 million after taxes. You just lost almost $24 million to the government. Now you might be thinking, okay Todd, but that's just how taxes work. Everyone has to pay taxes. And you're right. Most people do. But billionaires figured out a way around it. Instead of selling their stock and paying taxes, they borrow against it. Here's how. You go to a private bank, let's say Goldman Sachs or JP Morgan, and you say, I have $100 million worth of Amazon stock. I'd like to borrow $100 million using that stock as collateral. The bank looks at your portfolio and says, sure, we'll give you a loan at 2% interest. And just like that, you have $100 million in cash without selling a single share and without paying a single dollar in taxes. Now look, I know what you're thinking. But you still have to pay back the loan, right? So eventually you'll have to sell the stock and pay taxes. And that's where the genius comes in. You don't pay it back. Not in the traditional sense, anyway. Here's what actually happens. You borrow $100 million at 2% interest. That's $2 million a year in interest payments. But your Amazon stock is growing at, let's say, 10% a year on average. So your $100 million in collateral becomes $110 million. Next year you borrow another $10 million against that growth. You use that $10 million to pay the interest on your original loan, buy whatever else you need, and you still haven't sold a single share or paid any capital gains tax. And you can keep doing this indefinitely. As long as your assets grow faster than your interest rate, which for billionaires they almost always do, you never have to sell. You live off borrowed money for your entire life. And here's the truly insane part. When you die, Your heirs inherit your assets at what's called a stepped-up basis. That means if you bought Amazon stock at $10 a share and it's worth $3,000 a share when you die, your kids inherit it as if they bought it at $3,000. All those capital gains, all that appreciation, all that wealth that you borrowed against for decades, it's never taxed. The loan gets paid off from your estate, and your heirs get everything else tax-free. You literally avoided taxes for your entire life and then passed on your wealth without ever triggering a capital gains event. It's called buy, borrow, die, and it's the most powerful wealth preservation strategy in existence. Now you might be thinking, wait, that can't be legal. That sounds like a loophole. And here's the thing that drives me crazy. It is legal. Completely legal. It's not even a loophole in the traditional sense. It's just how the tax code works. The IRS doesn't tax borrowing because a loan isn't income. You have to pay it back, so technically you haven't realized any gain. And they don't tax unrealized capital gains because the asset hasn't been sold yet. So as long as you never sell, you never pay. And if you structure everything correctly, you can live like a billionaire, spend hundreds of millions of dollars, and never pay capital gains taxes on any of it. Let me give you a real example. ProPublica did an investigation in 2021 and found that between 2014 and 2018, Elon Musk's wealth grew by $13.9 billion. You know how much he paid in federal income taxes during that time? $0 in 2018. Zero. Because he didn't sell his stock. He borrowed against it. Same thing with Jeff Bezos. Between 2014 and 2018, his wealth increased by $99 billion. He paid less than 1% of his wealth increase in taxes because he wasn't selling. He was borrowing. And this is where the psychology gets really interesting. Normal people think of wealth as something you accumulate so you can spend it. You work, you save, you eventually spend your savings. But billionaires think of wealth as something you never spend. It's a tool. It's collateral. It's leverage. The stock itself is more valuable to them than the cash it represents because as long as they hold the stock, it can grow, it can be borrowed against, and it will never be taxed. Spending it would be the dumbest thing they could do. Here's another way to think about it. Imagine you have a golden goose that lays golden eggs. A normal person would take the eggs, sell them, and use the money to live. But a billionaire wouldn't touch the eggs. They'd go to a bank and say, I have a goose that lays golden eggs. Lend me money based on the value of future eggs, and I'll use that money to live. The goose keeps laying eggs, the eggs keep piling up, and they never sell a single one. And when they die, their kids inherit the goose and all the eggs, and no one ever pays taxes on any of it. Now look, I'm not saying this to make you angry, although it probably should make you a little angry. I'm saying this because understanding how the wealthy think about money completely changes what strategies are available to you. You're not going to be able to borrow $100 million against your stock portfolio because you probably don't have $100 million in stock. But the underlying principle, the idea of using assets as collateral instead of selling them, that's something anyone can use once they understand it. Here's a more realistic example. Let's say you've been investing for 10 years and you have $200,000 in a brokerage account. You need $50,000 for a down payment on a rental property. Most people would sell $50,000 worth of stock, pay the capital gains tax, and use what's left. But if you understand how billionaires think, you'd do something different. You'd go to your brokerage and take out a margin loan or a securities-backed line of credit. Most brokerages will lend you up to 50% of your portfolio value at around 5 to 8% interest. So you borrow the $50,000, keep your stocks invested and growing, and you pay a few thousand a year in interest. If your stocks are growing at 10% a year, you're still coming out ahead, and you didn't trigger any capital gains taxes. Or here's another one. Let's say you own a rental property that's appreciated significantly. It's worth $500,000 now, but you bought it for $200,000. You need money for another investment. Most people would sell the property, pay capital gains on the $300,000 profit, and lose a huge chunk to taxes. But if you think like a billionaire, you do a cash-out refinance. You borrow against the equity in the property, get your cash-out tax-free because a loan isn't income, and you keep the property. It keeps appreciating, you keep getting rental income, and you didn't pay a dime in capital gains. The point is, once you understand that the wealthy use debt strategically to avoid taxes and keep their assets growing, you start to see opportunities everywhere. You stop thinking of assets as things to sell when you need money and start thinking of them as collateral to borrow against. And that shift in thinking is massive. Now you might be thinking, okay, Todd, but what if the market crashes? What if your collateral loses value and the bank calls your loan? And that's a fair question. This strategy does have risks. If you borrow too much and your assets drop in value, you could get a margin call and be forced to sell at the worst possible time. That's why billionaires don't borrow anywhere close to the maximum. They borrow conservatively, usually around 25 to 30% of their asset value, so even if the market drops 50%, they're still safe. And they diversify. They're not borrowing against one stock. They have portfolios worth billions across multiple asset classes. But here's the thing. For normal people, the biggest risk isn't using this strategy. It's not understanding it and continuing to sell assets and pay unnecessary taxes. Every time you sell stock to spend money, you're doing exactly what billionaires avoid. You're triggering a taxable event, losing a chunk to the IRS, and giving up future growth. If you instead borrowed against those assets, kept them invested, and paid low interest, you'd be building wealth the same way the ultra-rich do. And here's what makes this even more powerful. Interest on investment loans is often tax-deductible. So not only are you avoiding capital gains taxes by not selling, but you're also potentially deducting the interest you're paying on the loan. You're getting a double benefit. The tax code is literally incentivizing you to borrow instead of sell. And billionaires know this. That's why they structure everything around borrowing. Let me tell you a story. I know someone who built a small business, sold it for $2 million, and immediately got hit with a massive tax bill. After federal and state capital gains taxes, they walked away with about $1.4 million. They lost $600,000 to taxes in a single year. Now, if they had understood how billionaires think, they could have structured the sale differently. They could have taken the payout in installments to spread the tax burden. They could have done a like-kind exchange into another business or real estate. They could have borrowed against the business before selling to pull cash out tax-free. There were so many strategies they didn't know about, and it cost them hundreds of thousands of dollars. And that's the real lesson here. The tax code is complicated on purpose. It's designed to benefit people who understand it and punish people who don't. And the biggest difference between the wealthy and everyone else isn't how much money they have. It's how they think about money. They think in terms of assets, collateral, leverage, and tax optimization. Most people think in terms of income and spending. And that difference in mindset creates wildly different financial outcomes. So what do you actually do with this information? Here's the thing. If you're just starting out, your priority should still be building assets. You can't borrow against wealth you don't have. But once you do have assets, once you have a portfolio or real estate or a business, you need to start thinking about them differently. Don't default to selling every time you need cash. Ask yourself, can I borrow against this instead? Can I keep this asset growing and pay low interest rather than triggering a tax event? And if you're serious about building wealth, you need to work with people who understand these strategies. A good CPA, a good financial advisor, they should be talking to you about tax optimization, asset-backed lending, and how to structure your finances to minimize taxes legally. If your advisor's only advice is to save more and invest in index funds, they're not thinking at the level you need them to. Here's what I want you to understand. The system is set up in a way that rewards asset ownership and punishes income. Billionaires pay lower effective tax rates than middle-class workers not because they're cheating, but because they structure their finances to take advantage of how the tax code actually works. And while you might not have billions to play with, the strategies are scalable. Borrowing against assets instead of selling them, deferring taxes as long as possible, using debt strategically, these aren't just billionaire tricks. They're tools anyone can use once they understand the game. If this video made you think differently about debt, taxes, and how the wealthy actually operate, hit that like button and subscribe because we're going to keep breaking down the financial strategies that nobody else wants to talk about. And if you want more content on tax optimization, asset-backed lending, and how to actually build wealth instead of just earning income, I've got more videos coming. I'll see you in the next one.